China's trade is suffering its worst slump in nearly 3 years.
Yeah, the announcement of the drop comes as China rolls back its stringent COVID-19 policies following widespread protests. Chinese customs data shows imports into the country fell 10.6% in November from last year, and Chinese exports to the rest of the world plummeted by 8.7%. The downturn marks China's steepest decline in trade since the early days of the pandemic.
Marley Kayden joins us now. She is a business reporter and a professor at DePaul University. Marley, good to have you. Thanks for joining us.
Thank you so much for having me.
So trade in China is suffering, but today the nation eased back some of its strict COVID-19 policies. What kind of move will that have in the Chinese economy?
Well, they're already going to start seeing some of those impacts immediately. They've been lessening those controls through this week. We saw some big improvements today, but it's already showing some positive attribution into their GDP for China's overall GDP. The negative impact of those COVID controls last week was greater than 25%. As of this Monday, it's under 20%. So we're already seeing some improvement in the Chinese economy with those rolling back of those COVID policies.
Marley, I'm hoping you can explain for our viewers if this is good news or bad news for the U.S., that China is suffering a lag in their exports and their imports, both in terms of what it means for the U.S., the health of the U.S. economy and our trade deficits, but also for consumers who have for a long time counted on China to provide inexpensive goods.
Of course, Lana. No, so obviously we don't like those trade numbers, that decline in trade, the worst in 2.5 years. We don't want to see that. But with the easing of these COVID restrictions, that is a positive for our economy. We will start to see more trade, more allowance of trade, hopefully taking some of that pressure off of the supply chain crisis. That's where those policies were really impacting Americans. For our economy, that's where we were taking the biggest hit. We were having issues correcting the supply chain issues because China wasn't getting those exports out, and then we weren't getting them in turn. We also were having trouble getting things into the country. And it's such an important relationship for the U.S. economy, and it also puts pressure on inflation in our country. If we can't get those goods, then the prices of what we have to pay for things here in America continue to go up. And obviously that is what the Fed is trying to fight right now. So seeing these restrictions eased is going to be a benefit for the U.S. economy overall.
The next Federal Reserve meeting is exactly 1 week from today. We've seen conflicting reports about the state of inflation. Any idea what direction the Fed will take? Inflation is still historically high, but the economy remains strong.
I think what is expected, what's priced into the market right now, is a rate hike of 50 basis points, which is actually good news, right? Because we've seen 75 basis point hikes at the last several meetings. So this would be an improvement, a smaller rate hike, pointing that things are going in the right direction. This news out of China is also helping right now because the Fed mentions China and its COVID policies in every meeting. It mentioned it, I think, 8 times in the June meeting. So having some of those policies lessened puts less pressure on the Fed because they can't fight supply chain issues. They can put pressure on prices here in America, but they can't fix those supply chain issues. So if some of those issues start to work themselves out and we're allowed to have a bit more unrestricted trade, it does make the Fed's job a bit easier. All eyes are really on that February Fed meeting, though, and whether or not we'll see another decrease to a 25 basis point hike, because that could signal possibly an end to these rate hikes, and if we're going to see that soft landing or if it will be a hard landing and there could be a recession involved.
All right, Marley Kayden, thank you very much.
Thank you so much.